P2P arbitrage, also known as peer-to-peer arbitrage, is a trading strategy that involves taking advantage of price differences between different P2P exchanges. It can be a profitable method if executed correctly. In this video, we'll learn how to engage in P2P arbitrage. Before diving into P2P arbitrage, it's essential to have a solid understanding of how it works. P2P arbitrage capitalizes on price differences between peer-to-peer platforms or exchanges. These price differences can arise due to variations in supply and demand, platform fees, regional market conditions, or liquidity discrepancies. By buying an asset at a lower price on one platform and selling it at a higher price on another, traders can profit from these disparities. To begin, research and identity reputable peer-to-peer platforms or exchanges that offer the asset you intend to trade. Look for platforms that have a significant trading volume, robust security measures, and positive user reviews. Popular P2P platforms for cryptocurrency trading include local bitcoins, Paxful, and BISC, while platforms like eToro and Plus500 offer P2P trading options for other financial instruments. Once you have selected the platforms you wish to trade on, proceed to sign up for an account on each platform. The registration process usually involves providing your personal details, creating a username and password, and agreeing to the platform's terms and conditions. After signing up, you will typically need to complete a verification process to enhance security and comply with regulatory requirements. This process may involve submitting identification documents such as a passport or driver's license, proof of address, and in some cases, a selfie or photo for identity verification. After completing the account registration and verification, you'll need to deposit funds into each platform you can trade on. The specific deposit methods and options vary depending on the platform. It's important to have sufficient funds available on both platforms to execute trades on both the buy and sell sides of the arbitrage. Once your accounts are funded and ready for trading, the next step is to monitor the prices of the asset you wish to trade across the different P2P platforms. Look for significant price disparities between platforms that could potentially lead to profitable arbitrage opportunities. Various tools and websites can help you track and compare prices across platforms such as CoinMarketCap, CoinGecko, or specific trading software or bots. It's crucial to consider factors like liquidity, trading volume, and order book depth when evaluating price differences. When engaging in P2P arbitrage, it's essential to factor in the fees and transaction costs associated with trading on each platform. Different platforms have different fee structures, including deposit fees, withdrawal fees, trading fees, and network fees for crypto transactions. Consider these costs when calculating potential profits. It's also worth considering the time it takes for transactions to process on each platform, as delays can impact the effectiveness of your arbitrage strategy. Once you have identified a favorable price differences that exceeds the associated costs, it's time to execute the arbitrage trade. Start by buying the asset at the lower price on one platform. Place a buy order on that platform, specifying the desired quantity and the maximum price you are willing to pay. Once your buy order is filled, proceed to sell the asset on the other platform at the higher price. Place a sell order on the second platform, specifying the desired quantity and the minimum price you want to receive. It's crucial to act swiftly as price disparities may narrow quickly, reducing potential profits. After selling the asset on one platform, you'll need to transfer the funds to the other platform where you initially bought the asset at a lower price. Familiarize yourself with the withdrawal and transfer processes on both platforms to ensure a smooth transfer. Some platforms may require additional security measures such as two-factor authentication or email confirmations. Be aware of any withdrawal limits or processing times that may impact the speed of the transfer. It's essential to transfer the funds promptly to avoid missing out on future arbitrage opportunities. P2P arbitrage is a dynamic strategy that requires continuous monitoring of the market for new arbitrage opportunities. It's essential to repeat the process by identifying price differences, assessing fees, executing trades, and managing transfers. Keep a detailed record of each trade, including the executed prices, fees incurred, and profits earned. This record will help you analyze the effectiveness of your strategy, identify any patterns or trends, and make informed decisions for future trades. Regularly review your trading history to evaluate your profitability and adjust your approach as needed. Like any trading strategy, P2P arbitrage involves certain risks. It's crucial to implement risk management practices to protect your capital. Consider diversifying your trades across multiple assets and platforms to spread the risk. Keep funds on different platforms to mitigate the impact of potential security breaches or technical issues. Finally, consider setting up stop-loss orders or implementing hedging strategies to minimize losses in case of adverse price movements. Stay updated on market news and be aware of factors that may impact the asset's price or the stability of the platforms you're trading on. And with that being said, it's time to end our video. Subscribe to the channel for more amazing videos like this. We'll see you with another interesting video.